If you're watching this, you're probably looking at a home that needs work, or at least wondering if renovation financing is even an option for you. Now, before you start clicking through the details on this page, I want to give you a clear, big picture roadmap on how renovation loans work and how they're different from a traditional mortgage. Now, a quick context on me. My name's Andrew Adams, and I've spent a large part of my career specializing in renovation financing, working with buyers, real estate agents, contractors, and HUD consultants on everything from light updates to full structural renovations. Now, I've seen these loans work extremely well when they're set up correctly. And I've also seen where things fall apart, when the process isn't fully understood up front. What I'm going to walk you through here isn't theory or marketing language. It's the real framework I've used for years to help clients make good decisions and avoid unnecessary surprises. This video is simply meant to orient you. The deeper explanations live right here on the page, and there are 6 key differences I want you to understand before you go any further. First, with a standard mortgage, your pre-approval is tied to one number, the purchase price. Renovation loans look at something broader, the total acquisition cost. Now that includes the price of the home, the renovation budget, and required reserves. So instead of asking, can I afford this house? We're asking, does the finished home fit my budget? Second, renovation loans require clarity about what work is being done. Not perfection, but a good definition. This is where the scope of work comes in, and in many cases, where a HUD consultant adds real value. They help translate plans into lender-approved documentation and reduce surprises later in the process. Third, in a renovation loan, the contractor is part of the approval. Before closing, lenders have to verify licensing, insurance, experience, including a detailed proposal. Now, this step isn't about slowing things down. It's about making sure the project can actually be completed as planned. Fourth, renovation loans rely on 2 values. The as-is value reflects the home today. Now, in a purchase, that's the agreed upon purchase price. And then there is the after repaired value, which reflects the home once renovations are complete. Now, your loan is going to be structured around the future value, not just the current condition. That's one of the biggest advantages of renovation financing over home equity loans and other ways of funding renovations. Fifth, traditional loans release all funds at closing. Renovation loans use a draw schedule. Funds are released in stages as work is completed and verified. Now, it's important that the contractor understands how and when funds are dispersed. That draw schedule is created during the approval process. This structure protects the borrower and keeps the project moving forward in a controlled way. And the 6th and final difference is that renovation funds are held in a repair escrow and released as work is completed. That ensures the work is done before payment is made. It keeps the project in balance and helps prevent stalls. It's accountability, not red tape. Renovation loans aren't more complicated because they're risky. They're more structured because they involve more moving parts. Once you understand the roadmap, pre-approval, planning, contractors, valuation, and controlled funding, the process becomes far more predictable from here. You can click into any section on this page and explore the details at your own pace. And as always, if you have any questions, don't hesitate to reach out.